Hello, everyone. I'm Tony Dorgan, and this is Derek Patterson with your Sustainable Future Podcast.
What's happening, everybody? Today is an exciting episode. We have a special guest, our good friend, Eddie Alberton. He is the founder and owner of Maui Solar Project out of Maui. And this solar company is based out of Hawaii, powering homes in the islands, right?
That it is.
Okay, so he's also working currently here in California with one of the biggest energy-efficient solar financing companies. Not just solar, but energy-efficient financing companies in the state of California. So without further ado, Eddie, I want you to take it away. Tony's going to ask you a couple questions. We're happy to have you. As a matter of fact, you are our first guest on the Your Sustainable Future podcast, man. So I really appreciate you coming on with us.
Thank you so much. It's such an honor. I'm so happy to be here.
Yeah, it'll be an honor when we got 20,000 followers. I'll tell you that right now.
I'm sure it's right around the corner.
Yeah, exactly.
Awesome to have you, though, man. Thanks for coming on. And, like I said, man, we're excited to have you. I know there's a lot of good things cooking with California First and Renew Financial and your background coming from both spaces. So we're going to ask you a little bit about that today. So
why don't you just jump into Maui Solar and just kind of tell us how that got started and what you're doing there, and then tell us how long you've been with CalFirst.
All right. Well, so started way back in about 2008. I was living in the Hawaiian Islands looking at...
that doesn't suck.
No, it's actually...
Yeah, that's rough.
Best times of my life. And I was actually in the mortgage industry, working... in just about the end of the good times when it started going downhill.
That time frame pretty
well, yeah.
Gives me chills when I hear it. You know?
So I was really looking at other alternative ways of keeping the business going, looking at energy efficient mortgages, and I reached out to some of the small. Well, at the time there were only about 2 or 3 other solar companies in Maui to try to work with them to finance solar deals.
Sure. And
unfortunately, they didn't have big pictures or big planned ideas. So I decided there was a huge opportunity. So I stepped on out of the mortgage game, went and learned about solar, and started my own company.
You took this leap of faith in 2008, which was a hell of a volatile time to be doing anything as far as starting a company.
Yeah.
And you went right into probably 2008, the end of 2009, and you said, screw it, I'm doing it myself.
Yep. I was like, there's too much of an opportunity.
That's balls of steel right there, brother. I like it.
Awesome.
I like it. That is fantastic.
Yeah, and it was... it was an experience. I had no electrical background and no contracting background, so but I knew there was a business to be had. So we started it up, found some great installers that we continue to work with today.
Right.
And we have grown that company over the last 8 years to probably one of the top 5 solar companies in Hawaii.
Wow, fantastic! Congratulations!
Thanks so much.
That is awesome.
So it's great, and it's also taught me a lot about the industry and Hawaii being on the forefront of sustainable energy, for the country.
No doubt.
It's great to bring that experience and what I've learned over there here to California and working with contractors and homeowners alike, helping them prepare and plan for the inevitable future of sustainables here that Hawaii's already seen and had to deal with.
I can imagine being an island, it's hard to get energy out there if it isn't produced right there on the spot. So
yeah, very expensive.
Yeah,
everything's run by diesel and has to come in by boats run on diesel, and then the diesel fuel is burned. So it's quite expensive.
A lot of pollution and a lot of non-sustainable resources to power that island. Right. And now the sustainable side that you've created and helped create out there. That's fantastic.
That's just awesome.
Great job.
So, thanks.
So then you did that for a while, and then what brought you back over stateside? To the
a
mainland?
Woman. Go figure.
Well, hey, that happens.
It happens. Yeah.
Now, was she a Hawaiian woman or was she a California woman?
She was actually an East Coast woman living in California.
Hey, all right.
Oh, wow.
So, good stuff. Now,
visiting Hawaii, is that how you met?
Yeah.
Okay, cool.
So
is that the wife now?
It is the wife now.
Congratulations, man.
It was the right choice. It was a good move to have.
There you go. All right. Good stuff.
Yeah. So it was a small price to pay, but I love it here, and like I said, it's a great place to continue doing what I started doing so long ago.
2 things. Congratulations, number 1, on starting the company in a really rough economic time for the country, let alone the islands. I know the islands were hit hard with the recession and the default of the subprime mortgage industry predominantly.
Exactly.
But as you transition and you move out to California, that's a leap of faith in its own, just to have a company running when you're not physically there.
Yeah.
So congratulations to you, because that shows that you built an actual real company.
Yeah.
So
I will give a lot of props to my partner.
Hey.
He
That's
runs
right.
the day to day and keeps that boat
that's
afloat.
a good partner is hard to come by. No
They
doubt
are.
about that. So
Absolutely.
Well,
So
right
then you came back to the state side. What connected you with California First?
Actually, it was a little bit of a slow road to get to California First. Being that energy conservation is what's at my core.
Mm-hmm.
I came to San Diego and started actually doing residential in-home solar sales for a company.
perfect.
Oh, cool.
Okay.
Which let me just build upon what I knew and what I love to do. I did that for about 2.5 years, and then really my drive to help more people took me into the LED world.
Wow. No kidding.
So to be solar is great, but you have to own the home or the building to benefit from.
Yeah,
it.
you betcha.
So
Could really benefit. Yeah.
lighting actually expanded that footprint of me being able to help people that rented space or leased buildings. They could still see energy conservation.
Wow. Yeah, we'll have to have him back on for another episode when we go into the lighting portion.
Yeah.
So that'll be
Not
cool.
only that, lighting portion, but you see at Renew Financial or California First, tell me, it's not just solar, right?
No.
It's multiple energy efficient upgrade type products, right?
Correct. So that's the next step after the LEDs, brought me to Renew Financial because it was one step farther to my passion of helping more people with energy conservation.
Absolutely.
So at the root of everything, it's about helping the end user save money, be more efficient, and help protect our planet.
That's awesome.
That's it. That's your Sustainable Future podcast right there, baby.
There you go.
That's awesome.
So
Good
how long has it been since you've been with CalFirst now?
I've been with CalFirst for about 1.5 years now.
Wow,
fantastic.
So I was probably one of the 6th sales managers for them here in the California area. So it's been great to be with such a really ethical, strong foundation company that wrote PACE. They are the founders.
Really did, yeah.
They're the
you
founders
guys were
of
the
PACE.
originators, no doubt about it.
So, to be with that company and to really be taught what the program's about, how it works, how it was intended to work, from its concept.
Yeah.
It's been a really great experience.
Wow, that's awesome.
So it kind of sounds like you hit the nail on the head there, but is that what makes California First unique compared to some of the other PACE programs that are out there?
I think probably if you had to break it down to one thing, it would be ethics. Okay. I think that, that sometimes gets lost in industry.
Absolutely. Absolutely.
But, there's a lot of other people that took the rules and the things that were written and maybe interpreted them different ways, and saw different things in the way that the codes or the laws were written.
Right.
So some of that has come back to bite some of the other companies.
It's a good way to put it.
But that's fortunately for California First, being that they wrote the book, they actually understood the rules very clearly. They've been very straightforward and very clear-headed moving forward.
So I take that as an analogy opportunity for you coming from the mortgage business, myself also coming from the mortgage and lending background, as they were the A paper of the industry.
Correct.
Right. You guys were the A paper of the energy efficient financing industry. You did it right from the get-go. In a downtime or in a time of turmoil or controversy, you're still standing strong because you did it right from the get-go.
And growing.
Yeah, that's true. And growing. You guys are, well, I know when we first got started, and California First was predominantly up north. Renew Financial, that's where the birth of it all up in Berkeley area, right? We know the story, and it's a pretty exciting story, as a matter of fact, as it came to fruition with Schwarzenegger passing the bill and all that when he launched out of office. But when you guys started to expand into Southern California, you had a lot of that growth on your shoulders as a district manager and what was that role like for you? What was that helping California First get exposed to Southern California?
Yeah. Well, it was an experience.
Yeah.
We're walking into a territory that was heavily dominated by our competition.
Right.
So there was a lot of doors to be kicked down and a lot of education that needed to be taught. But I think that it's been a slow process.
Right.
But I think as the time's gone on, as I said, some of our competition has run into some other issues.
Yep.
It has brought to light the values and the differentiators in different PACE providers and why maybe California First is a better choice for a lot of those contractors, being that they take so much time and energy and pride building their companies and their reputations. Is working with another company that may not be in alignment with their ethical beliefs the right choice to grow their business where they want it to go.
That's good. And at the end of the day, you're servicing homeowners, right? I mean, yes, you're a financing option for contractors who are then in the home actually articulating the solar project or the roof project or the windows or combination of all the above, the sustainable future project, right?
Right.
But really, a lot of those people are affording it a lot easier now because of Renew Financial and California First and the PACE provider. And they're making that affordability because of equity and the different options of the way you can get the homeowners actually opportunity to use the financing available to them in their homes.
Right.
So we're going to talk about that when we get back. We're going to take a quick break. We'll be right back at you. And so, again, guest star here, Mr. Eddie Alberton. We'll be right back on the Your Sustainable Future podcast.
And welcome back, everybody, to Your Sustainable Future podcast with Tony Dorgan, myself, and Derek Patterson over there, and our special guest star, Eddie Alberton.
Absolutely. So, Eddie, we were talking about before the break, we were talking about the transition and the opportunity for you to work on both sides of the house. The opportunity to provide homeowners financing, but then also you've already been on that side of the house. You run a solar company. You haven't just ran one. You've run a growing solar company. You've been the contractor, and now you're the financer. So you got the best of both worlds. And so what has that taught you being on really both sides of the house? How much an advantage do you have when you're relating to the contractors out there, trying to make sure they understand how to use CalFirst?
That's a great question.
Yeah.
I mean, really, I think that's probably one of the biggest values that I can bring to the table here in this industry, in this market. So I think probably the biggest thing for both customers and for the contractors is that I can relate.
Yeah.
I've talking to the customers directly about the product. I can help guide them through the choice of contractors that they're working with. What should they really be looking for to make sure they get the best value in what it is they're looking to buy, whether that be HVAC, siding, roofing, solar, synthetic lawns. So, and then as I speak with contractors and I talk to them about the program and maybe trying to persuade them to come over to California First from using some of our competitors.
Right.
I understand what it takes to run a business. I can help them understand some of the benefits really from a business level of using our kind of financing versus traditional financing that they may be used to. So being able to sit down with them, show them how it can affect their bottom line on that end for the business owners, and then for the property owners, let them know what is now available to them that they otherwise couldn't get through traditional financing. Being able to do an umbrella kind of financing so they can do windows, doors, turf, and solar all under one financing option that has all of the amazing benefits that PACE has over traditional financing.
Correct.
And I know that the contractors we know out there that are doing a great job in the industry helping homeowners with these upgrades, your financing opportunity has brought a lot of options to them to be able to be a multifaceted option for homeowners and affordable, really affordable, and it makes sense. Kind of a no-nonsense option.
Right.
Really.
And I really think in today's market of sustainable energy and energy conservation, that in order to survive and to grow a business, you really have to be diversified. And so you can't rely on just solar because we're really out of control with the utilities and how they want to manage that.
Yeah.
And it has its ups and downs. And with water conservation, so having a company and working with these business owners to teach them and show them how they can be diversified and walking into a home and do really full building envelope solutions can increase their bottom lines, as well as helping the homeowner reduce their monthly expenditures.
More of an assessment to prescription as opposed to product to sale.
Exactly.
That's very cool.
I like that. That's great.
So I guess with that being said, another question we have is, what are some of the common myths that you hear out there that kind of like objections or myths about the program and PACE itself? And then, what is the real truth behind all that?
Okay, great question. There's a lot of things that have come up about PACE that are just, it's a new program. It's really only been in existence for about 5 years, really heavily used. So there are a lot of misconceptions about it. I think the biggest one is that in a PACE assessment is a negative effect on a home, especially if you want to refinance it or sell it.
Right.
And I think that's probably the biggest misnomer is that it's an assessment to your property tax bill, which has so many benefits, which I'm sure is another conversation for another
Yeah, we're
day.
definitely going to have you on for something further in the depth of that conversation.
But
that is huge.
But the ability to have it sit on your property tax bill means that it does have the ability to transfer in the sale of the home.
Right.
So gives the homeowners a really strong ability to pay for what they use and let the next homeowner pay for what they use.
Exactly.
Right.
Cool.
So
it's
there's
only fair too.
Right. So it's very easy. It does have the ability to transfer in home ownership, and if you are refinancing, California First does a resubordination, which means we will
huge.
It's huge, right? Mm-hmm. So we'll take our position above the first lien mortgage and put it underneath so that they don't have a problem refinancing your home.
Sounds like a sustainable business model to me.
Yeah, absolutely.
You know, you guys listening out there, that was one of the major things that we know that we saw as the PACE program was launching in Southern California, was that hindrance that so-called hindered the real estate market a little bit on the refinance or the purchase of a PACE lien. Right. And now that subordination, which you just brought up, that ability with Fannie Mae and Freddie Mac that just became available, it was like August of 2016.
2.5 months ago.
I mean, so this is all new information. There's a lot of agents and real estate agents out there, professionals, mortgage lenders, that don't even know this is happening.
Exactly.
They're literally learning it as they start to do more transactions. And this is the beauty of being on the forefront of the sustainable future of all of us and having that opportunity for the financing. And I think that's just awesome that you guys were able to communicate and correlate and cooperate with the big industry moguls of Fannie Mae, Freddie Mac in the mortgage side of the house. And I know you know that conversation well.
Yeah, and what all that basically means for everybody is that this incredible program is now federally securitized.
Yeah.
So it means that it'll be able to roll out and really, once again, look at California as a birthplace of PACE.
Correct,
and setting the foundation of what it's going to look like as we roll it out state by state nationwide.
Okay.
So, awesome. Talk about sustainability. I love
it.
Right.
So, I think one other benefit or other, I guess, misconception about PACE is that, it hurts the equity of the home.
Right.
When in actuality, it's the complete opposite.
Oh, wow.
So, really, when you do a lot of these energy efficiency upgrades, we're actually increasing the value of the home. We're adding value, right? Mm-hmm. We're making them more comfortable, we're making people feel safer, and we're increasing the biggest investment most of these people have.
Yeah, you bet.
So, and when PACE, we look to equity as a qualifier, but not as actually use of.
Right. So it's not like a HELOC loan.
Right, exactly. So, we look to see 10% equity in the home to base qualifications if the home will qualify for the program, but we don't actually use that equity. So if the customer had $50,000 in equity, they went ahead and installed a $40,000 solar turf project, and then 2 months later wanted to go refinance their house, get a HELOC, they would still have that $50,000 in equity available to them.
Wow.
So it really is
huge.
One of the most amazing ways to finance these products, increase the value of our home without taking anything away from it.
Yeah, that's massive.
So what does it do for the credit then?
Great question. It actually doesn't affect credit at all.
Fantastic.
The basis of the PACE program is that the home itself is borrowing the money.
Wow.
That's why it goes on the property tax bill and you get the other benefits that come along with it. So the individual we look at as a qualifier, again, just like the equity. Is this a responsible person?
Yeah,
you own the home, you pay the bills on the home,
correct,
but we're not loaning that person money.
Right.
We're actually letting the house borrow the money to increase its own value with these projects.
So it's almost like the bank is you, and the home is sitting at the table with the bank, not so much the homeowner.
Correct. The homeowner is the pass through. So you have no effect on your credit. It's not FICO driven.
Right.
So everybody can qualify as long as they meet the 5 basic requirements.
Right.
It doesn't sit on your credit report, so it doesn't affect your DTI for future borrowing.
Whew, that's huge.
Yeah, that's huge, right?
That is huge.
So you can leave that flexibility open to you, and you can look at longer term financing without the weight of traditional financing sitting on your credit report.
So if somebody wants to go solar and turf, like you said, they don't have to worry about if they want to go buy a new car, that it's going to affect that decision with the car dealership.
Or a second home.
Right.
There you go. Yeah.
That's awesome, man. That's awesome.
So, I think that those probably are some of the biggest misconceptions out in the market today.
And, we've heard a lot of those. And so we appreciate you kind of bringing that to surface and then really kind of squashing it.
Yeah.
Because that's what we just did. You just squashed all the rumors of it's really the uneducated general public, whether it's professionals or the general public, that just don't know the details yet. And they're not up and staying up with the times, like what's happened with the subordination and the agreement with Fannie Mae, Freddie Mac. That's a big deal. I mean, those of you listening out there right now, that is so huge for the PACE program for California First, the largest of all PACE providers, the steadfast, the beginner, the creator of the program. And, it's helped thousands of contractors be more efficient and more sustainable in their business, helping homeowners, doing a good job.
And that's our job, right? That's why we're here today, to help educate, bring the awareness of the program and its incredible benefits to the forefront so that less people are scared and more people are excited about utilizing this financing that's available to them to help improve the quality of their life.
Yeah, that's awesome. That is awesome.
That's just pretty awesome, yeah. So I guess that kind of sums up most of it. One other question is that going to make it hard to sell the home? I mean, we kind of answered it in there, but just expound on that a little bit.
That's an interesting question because it really is one that depends on how you want to look at it. The beauty of PACE assessment, as I said, is that it has the ability to transfer in the sale of the home.
Sure.
Now, should the new purchaser choose not to take the assessment, well, then it's like any other traditional financing, right? It would be paid off in escrow.
Equity.
With the equity of the sale of the home. So it's no different than any traditional financing, except that it does have the option or the ability to transfer. The other side of it is that this is where the education of the realtors come into play, right? Because you can market a home several different ways. You can market a home that is worth $600,000 with a solar system that theoretically brings the value up to about $640,000.
Yes.
And sell the home for $640,000 and pay off the assessment in the close of escrow. Or if I was marketing the home a little bit more strategically, maybe I would sell the home for $600,000. If they take the assessment, the home seller is in the same position, but the home buyer now has a lower loan to value. They're getting a lower mortgage rate because they potentially are buying it under conforming limits now, where otherwise they might be out of conforming limits.
Right.
So it's really how you want to structure a deal and present it.
So
there's a lot of
favor.
It can absolutely work in the favor of the home purchaser if presented properly.
I have a real estate buddy and lender combo up in the Inland Empire area that do just that. Exactly how you explained to me, that's how they explain they deal with it. Whereas a lot of lenders we've talked to down in this area and a lot of real estate agents, they haven't quite figured it out yet. So I think this education piece is going to be huge, which is one of the reasons we do this kind of podcast.
Exactly.
Yeah, absolutely. No, it's been an absolute pleasure having you on. And I'll tell you what, the education that you just provided our listeners, the platform that people are going to be able to learn from and re-listen to this, share with their communities, share with their agents maybe as they're listing their home or as they're going into buying a home. We always just say every real estate transaction is just that. It's a transaction. It's a conversation. It's a negotiation. No matter what. How you package it, that's where the professionals come into play. That's why a good agent, an educated agent is important. That's why this Your Sustainable Future podcast had you on. So we appreciate you being here. We loved having you on. The education you brought to our listeners has been second to none. So with your background, congratulations on all your success.
Thank you so much.
We wish you the best, a happy new year, and much success into 2017 and beyond. And we look forward to having you on again on a future podcast, getting a little bit more information out to the public about what's going on and how the Renew Financial and the PACE program is dominating in the space of energy efficiency and your sustainable future.
Sounds great. I look forward to it.
So are there any final words you want to say before we close out?
I really appreciate you guys having me. I really appreciate what you're doing. I think that it's really important to get this kind of information out there.
Awesome. Thank you.
So putting the platform together and putting it out there for people to educate, it just affirms that there are great people out there that all have the same goal, which is energy conservation and helping everybody just do the right thing.
Yeah,
cool.
It's a global responsibility.
Exactly.
We're starting right
Yes,
here
it
in the
is.
Southern California area.
There we go. So,
All right. Well,
Awesome.
That's
Well,
it for
thanks,
Your
Eddie.
Sustainable Future podcast. We'll see you next time.
See you next time.
aloha.
Thank you.